What exactly is happening in the Calgary real estate market? Is the market crashing, or the market is stabilizing, or the market is just what it is? Well, in this video, I'm going to explain to you with data from the Calgary Real Estate Board what is the status of the market. And this is based on the data from the Calgary Real Estate Board in December. So just uh, stay with me as we go through the data for December, and that data will determine what is happening in the real estate market here in Calgary for 2026. So this is the snapshot of what is happening in the market. We have this summary, the benchmark price, which is the price of a particular a particular home or particular house. That they follow the numbers, they follow the performance over the years, and this is showing a price drop of 4.7%, and that is for the entire year. That is from December 2024 to December 2025, and this is for the entire property type. And then when we look at sales, we see that sales have decreased by about 15% year over year. New listings have dropped, which is a good sign somehow, but it's very, very little compared with a year before. But what is very, very eye-catching here is inventory. That means there's so many properties. So 30%, almost 30%, that's 29%, almost 30% more properties in the market than the previous year. And that also led to increase in the amount of supply by 51%. So a year before, that means we had about 1.5 or 1.7 months of supply. But now we have twice, almost no, almost one and a half that. So 51% increase. It's taking a bit longer, and that's how long it's going to take for all the properties to be sold if new inventory doesn't come onto the market. And the number of days is also going up. The number of days that property stays in the market has also increased. It's jumped to 53%. So let's look at the breakdown. The breakdown is here. We are looking at detached, single family detached. We are seeing a 2.6% drop year over year. Semi detached or duplexes dropped by 1.6%. They are the property type that's able to hold their own year over year. Townhouses, row houses, they have dropped 5.6%. Apartments, 7.4%, and that is where the pain is felt most. So entry-level housing segments, apartments and row houses saw the steepest price decline due to increased competition from new construction and rising inventory levels. Yes, we'll talk about that as we go on. And so you see that inventory level has gone up so much. That's 29% as we talk about. So for the first time since 2022, Calgary has entered the new year with healthy inventory, and that's how we'll look at it. It's something that we haven't experienced in a long time. So this increased supply has given buyers more options. Yes, if there are more properties in the market, then buyers are the ones that are being favored. When you look at the total inventory growth or new listing growth, it's 9% over that of 2024, 40,000 plus of properties in the market. That's a record high. Starts contributing to that supply. A lot of properties that are being built are coming onto the market are responsible for that. And What is also showing is that every property type is part of the apartment condos, townhomes, semi-detached, and single family. They are all part of the inventory gain. And that is leading to the market getting to a more stable situation. So when we want to look at the way the markets are being explained or described, you're going to look at the parameters that are used to determine that. So if the month of supply is less than 4, it's usually considered a seller's market. Um, Between 4 and 6 is considered balance, and then 6 and above is considered buyers. But here, we kind of a little close. This is still a seller's market, even though sellers may not be feeling it. But if you look at semi-detached, that's almost 4, so we can say it's a balanced market. Row houses also balanced. For apartments, the month of supply, or the overall month of supply, is more than 4, so we can say balance of buyers market. And if you want to look at the price trend based on the district, Calgary is divided to several districts. We look at the northwest, southwest, south, city center, southeast, northeast, northeast. We are seeing that the northwest was able to hold on. It was able to hold its own, and that's why we saw the lowest price change. The west side, or followed by the west side. Uh, some of the communities, the west side, we have Aspen, Cougar Ridge, West Spring, those areas. The south side, we have 4.3, city center, and followed by southeast, north. The north is some of the communities in the north. We have Country Hills, Panorama, um, Livingston, Carrington, those areas. That's the north. Then the east, you can talk about Applewood, Belvedere, those areas. And then northeast, you can talk about Saddle Ridge, Cityscape, um, Savannah. Those are the areas that have experienced the most price drop. So, looking at the north, where we have some of the northeast communities overlapping, then we have the east, and then we have the northeast. So, those are the areas. And interestingly, the northeast district had experienced the strongest price growth over the previous 2 years, making it more susceptible to current correction. So, I have the data I can share with you if you are looking for that. Between 2020 to 2023, 24, those were the areas with the highest growth. And no wonder they are the ones experiencing the sharpest drop as well. There are reasons for that. We know what is happening. People are leaving, especially temporary residents, and we also have a lot of inventory coming onto the market. Most builders will respond to price growth by building in areas where price growth is more intense. So then we can look at the regional markets. We have some communities around Calgary. We have Chestermere, Okotoks, Airdrie, Cochrane, High River, and then Canmore, which is the mountains. Well, before you get to the mountains, Banff, close to Banff. Yeah, so we have the data on those as well. And here we are seeing that, yeah, there's sufficient. Canmore can be said to be in a balanced market as well. Chestermere drifting towards buyer's market. Okotoks is where there's supply issues, so constraints. So they are still in a seller's market. And Cochrane is the market where we have buyer's market. They are actually more in the buyer's market right now. Airdrie balanced and High River. But when you look at the price drop too, you see that Airdrie is kind of following the pattern of Calgary, and the northeast of Calgary drop. Yeah, so Okotoks continue to experience tight supply conditions, 2.7 months of supply, while Cochrane and Chestermere are moving toward buyer-friendly territory. So for detached homes, we have 2.6% drop year over year. that put the detached home market in a, a kind of seller's market. But then it's not the entire Calgary. So that is why we advise that if you want to know if you have a property or you're living in a certain area of the city or you have an interest in a certain area of the city, let us know. We'll be able to get you the local data on what these type of properties are, how they are performing in those areas. So despite a slight year-over-year price adjustment, the detached sector remains the tightest segment of the market with less than 3 months of supply. Quality detached homes in desirable neighborhoods continue to see competitive interest, distinguishing this sector from the more balanced apartment and row segments. Transactions are taking longer to close, so sales activity and market pace 53 days, as we have indicated earlier. Sales to listing ratio, that means that it's average of 3% off list price. That's the average number. So, yes. And the agency has left the market. Buyers are taking their time to conduct due diligence and negotiate, resulting in longer listing periods and final sale prices coming in under asking price. So, looking at the year 2025 in review, we are seeing that the markets has regained, and also we now have supply surging by 29%, and that is ending the chronic shortage that defined previous years. Price correction, benchmark prices adjusted downward by 4.7, improving affordability for buyers entering the market. That means overall, we've seen, like you can say, that close to 5% drop in prices. Then the days on the market has increased to 53 days, allowing for more negotiation and due diligence. There's no need to rush. There's no need to jump on unless the property is extremely good, well priced, and yeah. So we are not seeing multiple offers these days. Construction boom, yeah. New listings rose by 9% and driven significantly by new housing starts and completion. So new properties, new housing, new properties coming onto the market are responsible for that. So there are opportunities, and this particular market situation kind of presents opportunities for buyers. If you're a buyer, you have increased selection. With inventory up 29%, you have more homes to choose from than at any point in the last 3 years. You have negotiation power, the return of conditions. So you have time to put in as much conditions as possible. You have time to make sure that you work on your financing. You make sure you do your home inspection, condo documents, reviews. You have enough time to do all of those, and then you have enough to negotiate on pricing. Better pricing. Homes are selling at 97% of list price on the average, meaning there's room to negotiate below the asking price. There were days where people were offering more. I remember there was a time where there were 79 offers on one particular property, and people came in with no conditions. Yeah. Then time to decide, you have it's taking 53 days on the average, so no pressure. Yeah, you have enough time to make your decision. Now, for sellers, that is the challenge. So when we get a call from sellers, it's very difficult sometimes to explain this to them for them to understand, especially people who bought a year or two ago. So now we have higher level of inventory. So inventory up 29%. Buyers now have choices. So where you list, like, okay, testing the market with aspirational pricing will likely result in stagnation. And we are seeing that. So you list the property as if you think that somebody will come and then present an offer, then you look at it. No, it's not working. You want to price competitively. You want to price ahead even of the market. And patience is also key. So I have somebody listed and then did a price adjustment and is asking, what is the update? What is going on? What? No, buyers are there. They see the listing, they wait, they compare before they even come and look at it. And after looking at it, there are a lot going through their mind. So it's taking time. So you want to be patient to as you list, and the presentation matters. So in a balanced market or even in buyers market for some of the property type, condition of the property is a key differentiator. So staging and minor repairs are no longer optional. they are essential to stand out. So you want to make sure that you want to make sure to do the paint job. Presentation matters. People will come if it's not in a good shape. Yeah, yeah. The buyer's interest changes and then they are gone. So looking ahead, now that we are in 2026, what is the data from December telling us? We believe that we're going to, I believe that we're going to see the market balanced. Detached sector will continue or will remain balanced. The townhouses, the row houses, and semi-detached sectors, they will get fully into a buyer's market. The detached sector too is also going to depend on the area and the location and what is happening with new builds in those areas. So we expect to see price stability, and then we'll be watching interest rates. This year, the Bank of Canada, their last statements in December, a lot of economies are, saying that there may not be any rate increase or any rate decrease this year. But we are just watching. Anything can happen. But if rates don't go down further, then the market is going to impact the market. But assuming something happens, or the government or the Bank of Canada decides to, depending on what happens in the economy, and if rates drop, then that might also trigger some interest. But we don't have enough people in the country. A lot of people have left. The immigration changes that is making it difficult for temporary workers to remain in the country, and people fleeing the country. So we expect that the market is going to be that balanced market here, and leaning more towards buyers market. So it's a good time for buyers, and also for sellers, it's a good time to plan uh, properly. So I want to I want to present to you my information here. And if you have any question on the Calgary real estate market, like I said, for each community, you want to know what is happening with the market in each community, or even each sector or districts. I have that data. I'll be presenting that in some other videos. So keep watching. Yeah, so every real estate journey is unique. So let's discuss your specific goals and how current conditions affect you. Whether you are looking to buy in a balanced market or sell with the right strategy, professional guidance is key to your success, and that is what we are here for. I've been in this real estate market since 2007, and I've gone through the boom and the bust cycle over the years, and so much of that experience I have and I share and I put at the disposal of clients that we work with. So if you have any question, just reach out. You can send me an email, you can send me a text, you can give me a call. And also I have a calendar link there. You can book the 15, 30-minute call where we can discuss um, any question that you have on the market. All right, so that is it. Please subscribe, and see you in the next video. Until next time, have a beautiful day. Bye.